Good morning, everybody. It's the 28th of September. We are Signal Centre Talking Bull. I'm Joe, joined by Steve and Jamie. Once again, how you doing, gents?
Yeah, very good,
Morning, Joe.
thanks.
Good.
Yeah, all
Morning,
good, all
morning,
good, thank you.
morning. Wednesday wreckage.
Yes, it is a bit of a wreck out there. Off to a pretty rough start again, by the looks of things, in a number of currencies and indices and cryptocurrencies joining it today. So we'll get into the charts in just a moment. But before we do, we will go through the latest headlines just to make sure everybody's up to date with what it is that's moving markets at the moment. So in terms of the latest headlines, the US consumer confidence number actually strengthened yesterday to 108 for September from a revised number of 103.6 in the previous month. This was also above the consensus forecast of 104.8. 5, it sounded like a radio station. There were significant monthly increases in the current situation and expectations component, with support from a decline in the gas prices, while confidence in the labour market also improved slightly. The hawkish Fed rhetoric, however, does continue. The Chicago Fed President Evans stated that he expects the central bank to raise rates further and then hold a stance for quite a while. His own assessments are that rates will be between 4.25 to 4.5% at year end, which is roughly in line with the Fed's median assessment. He added, at some point it will be appropriate to slow the pace of rate hikes and then hold those rates for a while to assess the impact on the economy. The St. Louis head Bullard stated that the US has serious inflation problems and the credibility of inflation targeting regime is at risk. He added that the rates are likely to peak around 4.5%, so they're all reading from the same book by the sounds of things. In terms of the Richmond inflation pressures, they eased slightly. The manufacturing index improved to 0 from September's -8 reading, amid a recovery in shipments, but new orders remained in contraction territory. Elsewhere, the US bond yields continue to increase again. We've seen the US 10-year yield move close to 4%, which is its highest level for 12 years, and that has prompted another round of US dollar buying. The correction was very short-lived, and the currency secured another round of buying on Wednesday as equities dipped, and there was fresh defensive demand for the US currency. In terms of what's happening in the UK, the Bank of England chief economist Pill stated that the central bank must ensure orderly and functioning markets. He added that the MPC is not indifferent to repricing of financial assets and that this repricing has a big impact on UK macro developments. He added that it was hard not to draw the conclusion that there will be need for significant monetary policy response. He did, however, push back against the possibility of an emergency move, with comments that it was better for banks to take a more considered approach. The latest policy move from the UK is drawing criticism now from the International Monetary Fund, the IMF, and Moody's also warned over the credit implications as fiscal policy remained under strong attack. UK yields surged, with the planned gilt sales set to go ahead unless the bond markets were disorderly. UK bonds registered further losses yesterday, with the 10-year yield surging to just above 4.5%, which is its highest level since January 2008. So that's actually before the financial crisis really kicked off, which was at the back end of 08 and early part of 09. So yeah, not much positive to take from any of that, really. Maybe the consumer confidence, you could argue, was a bit more positive, but obviously elsewhere we are seeing a pretty dramatic effect on a number of assets, and most of it's being led really by this unwavering strength in the US dollar, which we'll come on to shortly. But Steve, do you want to start us off with cryptocurrencies today?
Yeah, I just sort of like just looking outside this morning, and I'm thinking, obviously Russia has stopped importing or exporting gas to Europe and the UK, I presume. But has it started importing cold weather?
It
I
certainly
don't know
feels like it.
where's this cold weather coming from?
5 degrees today at my office, hence the reason I'm wearing a puffer jacket, because it is freezing.
Brilliant. Okay, well, let's hope it doesn't affect my internet like it did yesterday. But yeah, I'm going to dive straight into Bitcoin. That's the mother of the cryptocurrencies, and we're back under pressure. We saw a little bit of light relief earlier in the week. This is the weekly chart, but we've been slam dunk back into the support area. So we have the support sitting around about 17,600. That's the base of the support area. Next real support it comes in around about 14,000. So not really far away from that, are we? It's amazing that we've been talking about these sort of levels for a long time now, coming up to about 8-9 months. Looking at the shorter term chart doesn't really give us many indications yet as to whether this is a more serious dip. We've got this lower low here, which is a higher low compared to the 17,600, but lower low compared to recent price action. And we got the spike, we got down to 18,458. If we get below 18,150, then I'd expect 17,600 to start trading quite quickly. The one saving grace that we saw was Ripple. Ripple seemed to sort of extend higher, got up to around about 56 cents, but has had a bit of a torrid time, and it broke through support at which was formed by the low of 2 hourly candles. This support came in at 45.65, and we broke through that at 5 o'clock yesterday, and had a really nice sort of like break through it, nice push through it down to the previous swing high down here, 42.32, and we're hanging around that level now. Doesn't seem to be, I mean, there is a band of support, really, you could say, all the way down to maybe 38, maybe even 36. But yeah, Ripple under XRP under pressure also. Taking a look at commodities and crude oil. I'll start with crude oil, actually. Yeah, crude oil still remaining under pressure. And on the daily chart, we saw a rally yesterday into the previous 2 days of drops, but then price action was pressured later in the afternoon session, and it's formed an inverted hammer, which is not necessarily a bearish candle. So there's still a little bit of hope for crude oil, but we're sitting at this 78.6 fib retracement level. So really a break of this level here at $76, and I would expect a full retracement really down towards the $62 level. So further downside in crude oil if it doesn't manage to hold this support level. So definitely under pressure. Natural gas, again, very similar. Yesterday's price action looked quite positive to start off with. I think this is what I did my gun to head trade idea in. Looked quite positive. Looked like we were forming a morning doji star formation. However, slam dunked in the afternoon and under serious pressure now. The support level we've got in there is 673. The main formation that we had. Remember, I was looking for this sort of like pullback to retest the neckline of the head and shoulders formation. And it's definitely a mile away now. So the measured move target we had for the head and shoulders formation is a move down to 563. That looks more favored now. And gold has the pressure's piled on gold again. We saw the sort of like the looked like a bit of a pullback or a bit of a stall in the sell-off. Got back up to 1642 yesterday before sellers came back in. Again, an inverted hammer, so doesn't, you know, not the worst candle in the world for the bulls, but we've seen price action breaking down through this multi-week low. These are the lowest levels we've seen since all the way back in April 2020. Gold, what has happened to you? So obviously the swing lows of the pandemic are all the way down at 1452, but that really does open that up to the downside. There's a bigger fib here, 50% fib retracement coming in at 1560, 61.8 coming in at 1440. So yeah, further downside. Doesn't look too clever out there for any of those energy commodities, especially with this renewed dollar strength. I don't think they've got any chance.
Nothing's got any chance, really, Steve. The dollar really is just dominating absolutely everything, and it's just a runaway train, really. This is the weekly chart.
Oh, I like that chart, Joe. That's nice.
Yeah,
Put some
that's
time
right.
and effort in that time.
Yeah, That's actually been sitting there for quite a while, but I just keep going back to the daily. But I think we need to now zoom out on the timeframes, really, just to put this into perspective of how strong a rally this really is. So back in 2020, 2021, we completed a double bottom, and since then prices have just been on an absolute tear. We're breaking through major levels, as you can see. We are now posting fresh highs on this, up by 0.41% as things stand. The next level to target up really is up here at 121. And in order to put that into perspective, we need to flick to a monthly chart just to see really how huge a rally this has been. So these are the previous highs that we're now targeting back from August 2001. Well over 20 years, of course, since we last saw prices at these levels, and no real signs of it slowing. I mean, we can bring back other levels into play. Maybe this was the highest that we saw back in 1985. I mean, I think if we see it back up there, we're going to continue to see these commodities crushed. Bonds, of course, are still going to get hammered, and it's just doesn't paint a very nice picture at all, does it? Really?
No, it's interesting. Obviously, cable has hit its low from 1985 just recently.
Yeah,
So
through it.
yeah, but it's interesting the sort of ferocity of the over the last couple of weeks as well. And if you look at that, the pattern that has emerged from this rally from 2021, it's very similar to the rally from 2015 and the rally from 2008. The same sort of aggressiveness that we've seen. I mean, if you look at like that 2014 move higher in the dollar.
Yeah.
I mean, that was pretty aggressive, and 2008 before that, we're seeing things like that, and it's I mean, yeah, what was that one? 21%,
27%
27.
from the bottom in 2008. Sorry, that was peak to trough 26.7%. So maybe a bit of a theme here. What's this one been? Yeah, it's already above both of those rallies at 28% now.
Oh, maybe we should sell it.
Maybe we should. I'll let you go first.
Yeah, exactly. I'll
Yeah,
wait for the
because
reversal candle.
yeah, I mean, as technical analysts, we are always looking for confirmation of trends reversing. We need to see some evidence. We need to see some sort of candle, some sort of pattern, and none of that's being seen at the moment. So it's a runaway train. So don't stand in front of it. In terms of what's going on with cable, as Steve mentioned, that continues to move aggressively lower. That's been a pretty substantial move in its entirety. I mean, it goes back obviously a lot further than that, but the sort of most recent rally from May last year, we're looking at a 27% decline, which is pretty huge indeed. This 105.20 level is the low that Steve was referring to back from 1985. Let's go monthly just because we want to bring it onto the same page. These were the previous lows back in April 1985, a month before a couple of months before I entered the world. So,
Oh, it's a month after my 16th birthday.
okay, superb.
No, it's not. It's
Maybe
17th. Actually.
the volume's starting to increase as well on the monthly time frame. More selling by the looks of things. No sign of it slowing whatsoever. No real evidence of reversal patterns occurring on this. If we do take a look at the daily, actually, let's just bring that up. It has stabilized a fraction, but I mean, I've got this line drawn on here down here because that's parity, and you've got to think that's probably what we're targeting now on this. Obviously, if we take out these lows that we posted on the crash that we saw on the 26th on Monday, then there isn't a lot stopping it from sliding down to that level. Steve also highlighted that double top pattern on cable, which I think was best shown on the weekly chart. So we've got these two red arrows highlighting the double top. That would be the neckline there, the 114.20 level. If we take a measurement of that double top and project it lower, then it's down at 84.45.
Yeah, it doesn't feel too good, does it?
No, that is
Um,
pretty savage.
I think there has to be some sort of.
Intervention.
I mean, obviously,
I don't know what we can do to intervene now. I don't think the
no,
so low in the policymakers and the Conservative Party that I don't see what they can do to stop the
well,
rise of a
we
natural
know,
flow.
yeah, we all know that intervention never works. we know that. That's historically, it's never worked. So it could cripple. I mean, there was that time then when was it Soros trying to break the Bank of England?
Yeah.
And he failed, but he left the country in pieces for years and years and years. So I think any intervention now from the Bank of England would be seen as
Panic.
a panic move,
Yeah.
and could really backfire unless they sort of like went the whole hog and went all in with a pair of deuces. So and that
But we're borrowed up to our eyeballs now, aren't we? So
yeah,
what's
but
left?
so is everyone else.
Print some more.
It's just it's just a printing game, which it then impacts on inflation, impacts on higher rates. Then it sort of slows the sell-off down. There's no easy answer. I can't give you an easy answer to it. Just sort of like batten down the hatches.
Absolutely. So if we're talking, about this being realistic, this double top, if we are to follow the sort of methods that we, have all been trained in as technical analysts, then we're looking at maybe another 20% decline on sterling versus the US dollar. Pretty horrible, right? Okay, let's look at euro US dollar just to try and brighten it up. Oh no, we can't. That looks equally as rubbish. It's breaking down through major levels. So we are on the weekly below 95.95. That was the previous low, again monthly, just to bring it back in to show. Yeah, there was a high there which acted as a bit of support. Hoped that it would do a similar job, but we are referring to a level back from 2001. So it may not have any relevance any longer, but below that we're looking for a test maybe of the 2000 lows down at 82.31. So that indicates potentially another 13.5% worth of downside on euro US dollar. So that is looking pretty horrible indeed. A lot of numbers, a lot of lines on this chart, which I think we can now remove as they're not particularly relevant, but yeah, looking pretty horrible there too. Let's take a quick look at some of the other dollar linked currencies. This is Aussie. Big breakdown this week, taking out the 61.8% fib level of this move higher from the lows in 2020. Next level to focus on is the 60.41 level, which is a 78.6% fib level. Then we're targeting a full retracement of this entire move, which comes in at 55.06. Let's take a look at New Zealand dollar versus the US dollar. That's sailed through the 78.6% fib level and fast approaching this key low from March 2020. That's at 54.69. If that gets taken out, then we're maybe targeting a move down to these lows here, which were last seen in April 2009, which is at 48.80. If we look at the dollar CAD, we can see a big move to the upside there. There was a big falling wedge that had appeared on the weekly chart. We saw a decent break of that, but now we're really starting to accelerate higher. We're through the 61.8% fib level on the monthly chart, and obviously that month is coming to an end in the next couple of days. So it looks like we're going to confirm that strength. Then we're heading up towards maybe the 78.6%, which is at 140.99. Dollar Swiss. More strength seen here, although these two are kind of battling it out a little bit. There is obviously a lot of strength in the Swiss franc as well at the moment because it's generally seen as a safe haven. So we are fast approaching resistance at 100.64. If we take that out, then there are some levels here to focus on that go back to 2015 at 103.28. And if we take a look at dollar yen, that remains stubbornly high, showing no signs of reversing whatsoever as the yen still remains very weak. And again, we've seen intervention here and it's had really no meaningful effect at the moment. So that still remains very strong indeed. Okay, let's move on to the indices, see if there's anything there that is offering an encouragement, and sadly it doesn't look to be the case. Let's just look at the daily here. On the Euro Stoxx 50, we've broken down through this major level of support at 33.85. We saw a nice retest of that yesterday, which was a pretty large range all in all, but we're now making new lows. We're taking out the lows of yesterday's session and we're pushing to the downside. So no sign of that slowing at the moment. If we get some fib levels on here, we may be able to cling on to some hope of maybe a 68 or a 76 61, sorry, or a 76.8 level. Let's have a look. I'm not holding my breath. Okay, we've got a 78.6 in play at 32.20, so that may offer some short-term relief, but we've got to get there first, and that's still a pretty substantial move lower before we do. So another potentially 2% lower before we reach that level. CAC 40 broken down through a range here, looking pretty horrible. Big top pattern, showing again no signs of slowing. If we get some fibs up again, we can have a look at some levels to target. We've got a 61.8% fib level at 55.85 to target. That's also into this cluster of price action back here from 2021. So looks set to challenge that as a bare minimum, I would say. DAX broken down through the 50% fib level here. Also a big band of support at around 12,431. We're now targeting a move down to these lows here, which were from October 2020, and then shortly after that we've got 61.8% fib at 11,147. So in terms of percentage moves, we're talking about another 5.3% down to that swing low or previous low, and then another 6.8% to that 61.8% fib level. What do you reckon, Steve? Could we reverse this entire pandemic move?
The only way to reverse that is turn the chart upside down, mate.
Yeah. Is there an invert button on here?
There's not. There's no way this is stopping. There's nothing to. What is the good news that's going to come out? I can't see it.
A full reversal of that move, though, that would be pretty spectacular, right? That would
absolutely.
That'd be another 33% lower on the market.
Yeah, I mean, if you think about sort of like how we've got to these levels in the first place, it's through the, inflating the money in circulation, and that's what's happened. And now we're paying the price for it. So, yeah, it's absolutely can see, these markets tanking. There's nothing, interest rates aren't going to stop it. It's going to make things worse. Effectively,
We were talking about head and shoulders on this, obviously, way back when it was up here. But have we got an even bigger one forming here, which would be that as the left shoulder, or maybe that to the head, to there. That may be a right shoulder. What does that project as a move? Something savage, probably.
Yeah, it's probably down to about 9,000 or something.
8,568.
Yeah. Yeah, I can't see anything really to sort of like, it's okay putting fibs in to sort of this is the next level to target, but it's heading that way. I can't see anything.
It's just melting through. Then they're not doing anything.
I know for a fact it's going lower because normally at this point I've got some sort of small short somewhere, but I haven't got anything.
No, so you're trying to buy it now, aren't you?
I know. Yeah, just over the last few weeks, sort of small amounts that I trade, it's done really okay. I've taken the profit on the sort of like the shorts in my gold, in my indices, and got it right, but then haven't really sort of been completely focusing on that. So it's slipping away slowly, and I think these slow grinds down, and then they have a bit of an acceleration. You sort of like you never get that opportunity to resell.
No,
and feels like here. I mean, I'm not saying we're not going to get some spikes higher and some opportunities. They could still come, but they're becoming fewer and far in between. So you really have to be on it.
Yeah, so this is a FTSE 100 on the weekly. This is approaching a really important level, actually. As you can see here, a number of spikes.
Could be an interesting one. This is an interesting one, Joe, isn't it?
Weekly chart, yeah. So you've got a number of, so 1, 2, 3, 4 touch points. This is approaching a fifth. If it breaks down here, then I'd imagine we'd be targeting something into this kind of region, 65, 68. But again, what sort of job are the fibs doing at the moment, if any? So this is really, a really important level for the FTSE 100, and this at the moment is holding up quite nicely on a relative basis. I mean, it doesn't look nice, but it's holding up better than some of the other markets due to that dollar influence. But now it's really starting to bite. You're seeing, I think I did a look yesterday about the year-to-date performance of the FTSE 100 constituents, and it was literally the top 20 that's holding it up. Anything below that is down on average about 30%. So it's pretty
That's
rough.
obviously a dollar influence, isn't it? That's the dollar
Yeah.
sort of like a lot of those big companies have sort
Well,
of
if you
like their
I don't know if we can bring it up now. This is the stock screener that I was looking at. So I was just going to the performance tab that it's got on here. This is the most capitalized in the UK. If we go to a year-to-date performance and filter by that, right, that isn't the one I wanted. I did have one on here that was just UK stocks. Yeah, so there's a lot of funds in there that weren't doing very well. Then you get into all the stocks, and as you can see, on average, they're down pretty heavily over the
yeah.
last year. Ocado 70%, Persimmon House Builders 60%, JD Sports 55, Barrett
Wow.
Developments again another house, but the house builders getting absolutely hammered, down over 50% year to date. Then if you want to look at the best performing stocks, BAE Systems, which I guess is a beneficiary of war, sadly, because they build defence instruments and tools and everything else that goes with it. Then you've got obviously
Shell. Yeah.
power companies. Then you've got banks. Standard Chartered is obviously more of a global bank rather than a UK one, so that's holding up quite nicely. I imagine HSBC something similar there. But there aren't many before you then start moving into the red year to date, and
Wow.
there is a pretty substantial list there.
So there's
Um,
the opportunity, I think. The FTSE's the opportunity, isn't it? Like, if you haven't already sort of like got on this bear move, then that could be your last opportunity. A clear
Trading the
break of
break,
that, yeah, trading a break of that support level there.
quite
But
possibly.
it's yeah, it feels like we've come a long way. Do we get the little bit of a correction? It's going to be hard. I mean, FTSE's always been a bit of a difficult indice to trade, I've always found. So,
Yeah, absolutely. Let's move on to
but
the US anyway, because conscious of time. So this is the Nasdaq, and we're fast approaching a massive level here as well. This is 11,035. This is the previous low from the 13th of June 2022. There isn't a lot of support on offer below this. So if it does break down, then I think that would kind of think the US markets are the last sort of line of defense, really, because they are generally so bullish. But if this starts to break down, then we're straight into a 61.8% fib at 10,500. And then below that, who knows? But this looks pretty horrible as well. Dow, obviously only 30 constituents as opposed to Nasdaq, which is 100, and S&P, which is 500, which we'll come into in a minute. This has already done the breakdown. This has taken out the low from June 2022, taken out the 38.2, looks to be heading towards the 50, which is at 27,578. So that's a pretty significant breakdown for me, and suggests that we are going to continue seeing lower prices. S&P 500, I think, is the main one that we need to watch because it is the bigger read on the broader economy in the US. That's breaking down on the weekly chart right now below 3636. So we've got a couple of days to try and hold on to this level. If we can do that, then maybe there is some evidence that we'll see a short-term turnaround. If we get a clean close below this, and then you've got to think that lower price is going to be seen, and as a minimum target would be 3,500 on that. The head and shoulders top that we've got here actually has a measured move coming in at 33.96. So for me, that's where I would be targeting in the short term, but I would prefer to see the close below this level at 3636 before I got too excited about targeting that. So sadly, it looks pretty sick across the board on indices at the moment. Jamie, I'm not sure you're going to be able to shed much positive light on the stocks either, but you can give it a go.
No, I could give it a go, but I feel I'd be wasting my time a bit. Um, but we'll start off with our biggest gainer of the day. I guess that gives us some positivity, and this is one we actually looked at relatively recently, because I already had the chart annotated. So this is ANTX, AN2 Therapeutics. It's up 31.13% yesterday. No real news on it there, but yeah, we had quite. I think last time we noted this, we had a nice breakout above this resistance level here. Ran right into the all-time high of this before selling off again. The same resistance was felt before breaking out again, and we're moving back towards that next resistance. So there you go, up 31%. Maybe I'll just leave it on the rest of the stocks there because it's not going to get a whole load better. Looking at our biggest loser, we've got Eve Holdings, down 18% yesterday. Let's have a quick look and see what we say here. Eve Holding said Tuesday that it has formed a partnership with Flyblade India, a joint venture between Blade Air Mobility and Hunch Ventures, down 18% on that news by the looks of it. Looking at a stock heat map for yesterday, and there was nothing too drastic, certainly nothing that's kind of spread the whole way through the S&P 500. Tesla actually had a pretty good day, and that's actually moving how we hypothesized it might the other day. So we'll check that in a sec. Meta platforms though down another 1.5%. That looks really sick at the moment. We'll check in on that. And then other than that, not too much really to note. So we'll dive into a couple of these names right now. Here we go. Starting off with Coinbase, actually, this is one we haven't looked at for a little while. Hasn't been looking as horrible as some other stocks have recently. We've got this support level here at 61, 62. Which has been holding up quite nicely. A bit of a descending triangle pattern though we've got now forming. We've had two touches of this support now which acted as resistance back in June and July, but now we're putting in the lower highs. You can see the price is failing to get to the levels that it did back in August, and this looks right for a break sometime soon. You could either be selling a break of this triangle or you could be selling the downtrend resistance. It's kind of up to you and your style, so you could kind of be putting something here with a stop above the recent high, and then either I'd say you could probably target these lows all the way down here. It gives you a nice 2.13, or alternatively you go for something a bit kind of tighter and use the kind of top of the candle. You'd have to have a bit tighter than that if you wanted to get the right level of risk reward that we go for, so that would be a bit more aggressive. Meta platforms, that we've checked on this a fair bit recently, but just no real hope really right now for Meta. Looking at a weekly chart here, we're below the COVID pandemic lows now, heading down towards those 2018 lows, and just not a lot really looking like it's stopping this train. You can see, as we've mentioned a lot before, the volume of this move downwards, high volume days are those bearish weeks, sorry. And yeah, just not a lot. I mean, it's had such a strong move up, but this looks really like it's set for a pretty spectacular fall unless something dramatically changes. Not a lot looking good here at all for Meta. Peloton, something similar. Got this head and shoulders continuation. This is just a little idea again. If you wanted to look for somewhere to get short, a break of this support level could be an area to do it with a pretty tight stop. Looking for that 2-to-1 risk reward. Yeah, another stock that looks pretty sick. Right at all-time lows down here now as well. Qualcomm, I actually was flicking through the charts this morning and saw we had this on a weekly chart, this head and shoulders top forming. So this is a really pretty big head and shoulders here, with the low from the pandemic, and then we saw this stage 3 distribution phase, and it looks like, you know, if we do get a pretty clean break of this, it's not horizontal, it's a bit diagonal, the neckline, but if we get a clean break of that, the measured move for this would be quite considerably lower. Let's see what it would be, something like this. So yeah, it would be targeting right all the way down to about $76, $77 there, which would be a considerable way lower than where we are now. So yeah, not looking good there for Qualcomm. Really looks, that's quite a clean one. I like that kind of pattern because you can't really miss it. Tesla, we said we were going to check this out as well. Ran into this short-term support level you can see here. Just get the volume off the screen and make it a bit cleaner. We thought that it might get a little bit of a bounce here before setting off, and so far it's looked pretty good. It's filled that gap we had between the 22nd and 23rd of September, and potentially now a bit of a move lower from here. And if we do get that break, our next targets are this level here, 253, then these lows of May and June down here, and then we've got this blue line. Let's see what this blue line is. Yeah, we got this kind of blue area of support here, which was the lows from May and March of last year. So yeah, again, and that, I mean, it's a long way off completing, but a bit of a head and shoulders top again, potentially forming here, something like that. We've got the left shoulder, head, and then this right shoulder if we do get back down to here. So yeah, one to keep an eye on there as well. Check out a few more. Disney, yeah, Disney's looking pretty horrible, just keeps moving lower. Don't really need to say too much there. Coca-Cola, I don't think this is one we've really looked at too much, but again, flicking through the charts this morning, I saw a bit of a double top here on Coca-Cola, and a pretty sizable move down yesterday, 2.5% too. And you see, look at that volume. I thought it might be really starting to pick up now on this sell-off. And the measure move targets, I've actually put out 2 targets for this, as the tops of this formation aren't quite level. So the primary target we've got here is actually from this second high to the neckline, and that runs really nicely actually into this previous area of support. And then the second level from the higher top is down at this second blue line. So yeah, potentially a bit of a move lower here for Coca-Cola. I wanted to have a quick look at a couple of European stocks to finish off. Boohoo reported earnings yesterday or this morning. Let's see, this morning before open, down 9% so far. And another stock that looks pretty horrible at the moment. Did actually beat slightly apparently on expectations, but when you take a step back and look at this from a technical perspective, really clean break. I remember we looked at this at the time. Maybe we did, maybe we didn't. But yeah, certainly even now you can see what a clean break this week was here, where it found support once, twice, and then a third time during the pandemic lows. That weekly candle there on that really high volume too was the signal that this was going to move a lot lower, and since then it's moved about 70% lower from this position. So yeah, Boohoo not looking great, and earnings so far haven't been responded to well. Rolls-Royce, to finish it off, this was the channel formation we had here. I'll bring it back to daily chart. We had this horizontal channel here. We got the break, we got the retest, and now we've hit measure move target. So that was a bit of a textbook technical pattern we had play out there, with the retest and then going on to hit target pretty convincingly too. So yeah, that's pretty much it on the stocks. I couldn't really bring much joy. I don't think I'll be bringing much joy for a while, so long as I'm checking out some of these stocks. But yeah, just reporting on what's going on.
Yeah, sure. We have had a request actually for Palantir. If you want to take a quick look at that for us, Jamie.
Yeah, sure. That's this, isn't it? Okay, my chart's very messy. Let's see if I can tidy it up a bit. Right, what are we seeing here? Let's bring it out to a weekly chart to start with. So you can see we're in a pretty convincing downtrend at the moment. Bring it to a daily. I mean, there's not a lot to love from the bullish side. You can see we do have a bit of short-term support at this level here, but we've had a sell-off. To me, this is a bit of a consolidation before potentially another sell-off. Again, you know, I always say I look at the volume. You can see the volume on the daily chart. Those high volume days are those red bearish days. So yeah, not a lot to love here, honestly. Let's bring on some moving averages, see what we can make from those. Yes, we're currently trading below the 50-day moving average, and well below the 200. Yeah, not a lot to love. I think the bullish side, what we need to see, at least to start things off, is a break above these highs we've seen here. Probably put it a bit higher, a convincing break of that. But even then, it's got a lot of work to do to get above all this overhead resistance. You can see probably get some trend lines going. I mean, something like this. So it's got to beat that. It's got to beat the 50-day moving average. It's got to beat the 200-day moving average. So a lot of work to do here. And yeah, certainly where we're at now, we're a long way off getting that. And it's just funny. I mean, I was kind of looking earlier how the characteristics change. You can see this probably isn't the best example, but those individual spikes you see are all green at this point, and that's when it was kind of doing quite well at the start. Obviously there's a couple of red, but it's just how things do then change as we enter that downtrend. You can see the spikes change as well into all these red volume days, which is why I like to look at it so much, because when you do get those changes, you see not just the higher individual ones, but the rallies we get as well. So you can see this rally here, the volume really just slanted off, and you can see that's that whole period before the sell-off began again. And that the rallies you get in these bear markets are all pretty similar in that characteristic. So you can see again, rally here, volume is really, really low as well. So until you see those changes in the characteristics, I think for me, I always look at volume, as you know. But until you get that reversal, not only in price but in volume too, to show that actually people are buying this and not just selling it, there's not a lot to love here. So yeah, long way to go for Palantir. Sorry, I hope I'm just
Yeah,
just
that's all right.
boring
No,
quite
just wanted to clarify to people who are watching that when it's a red spike, that means it was a bearish day. So you had negative price action, and when it was a green spike, it was a positive day. So, but yeah, that looks like potential for a nice continuation pattern or potential for a double bottom. That double bottom formation should have a measured move target of around about $9, which yeah. So
sure.
yeah, interesting. Yeah, but everything feels a bit end of the world at the moment, doesn't it?
Yeah, just needs a bit
It
of a
does.
flush out, don't we?
Yeah. Okay. Right. Thank you, Jamie. Well done. Let's move on to the gun to the head trades. Not that there's much joy to bring from this either. Just to reiterate what it is we do here, it is a bit of fun each day. We come up with some trade ideas live on the video, which expire at 9 p.m. UK time or when the stops or the targets are hit. Obviously, we have stops and targets and all these ideas that we come up with, and we must have risk reward ratios in excess of 2 to 1. Since we started doing this, we have managed to stay on the right side of profitability quite substantially, actually. But obviously you would need to follow those exactly from the point that we put them on and close them off at exactly the point that we do too in order to mimic that performance. So we'll have another go today. We'll just have a quick recap on yesterday's ideas. If anybody ever wants to check them out, you can do so on our Signal Center profile on TradingView. So Jamie was buying FTSE yesterday. We were both speculating, him and myself, on a bit of a rally in equities, but that was obviously quite foolish from us both because they've both dropped off quite substantially. There is the FTSE 100. I was looking at the S&P 500 as that was into a major support level, looked to be forming a short-term bottom, but completely died. And Steve was looking for a bounce in natural gas, highlighted a short-term inverse head and shoulders with a nice measured move target, but got off to a good start. But then, like everything else, it died due to pretty much dollar strength. So let's have another go today, shall we, gentlemen? Who wants to go first?
Can I go first? Because I've just got to
Yep.
shoot quickly if I can. I'm looking
Yeah,
at the Nasdaq. The S&P has broken down through its support level. Looks like it's further downside. Nasdaq hasn't quite done that yet. It's close to it. We've got the 11,048, or to be exact, 11,037 support, which was the 13th of June spike low. Looks like we're heading there. This week has been pretty bad. And bearish outside candle on the 4-hour chart dominating at the moment with another sort of 3-candle rejection or 3-candle bearish formation here, and we've just broken down below that the previous 4-hour candle's low, so really under pressure at the moment. So trying to sort of like trying to get a short going here. Let me line it up with price action at the moment. Getting short at selling at 11,171, targeting a move to 10,946, which is just in front of the previous spike low, and the stop is at 11,246. So it's a nice 3-to-1 risk reward trade idea. I might do that myself.
Oh, that means it's going to lose. Okay, so good luck, Steve. If you need to shoot off, please feel free to do so. Jamie and I will carry on. I will have a go next, if that's right, Jamie. I'm also looking at indices, looking at the DAX. So let's just go back to the daily to have in fact, I'm going to go to the weekly to set this up. So we broke down through this 12,411 level last week with a big move lower. We saw a retest of it this week. We're now below the 50% Fibonacci level as well. So for me, I'm targeting lower prices. I don't expect it to happen in a straightforward manner, but let's have a go anyway. So it's moved a little bit in my favor. So better entry, I'm getting in at 11,980. I think I should probably make my stop a little bit larger as a result of that. I'm going to go with 12,201 as a stop, and I'm going to target a move down to 11,332, which is a 2.9 risk reward ratio. And that target is pretty much this support level from this low back in October 2020 that I'm trying to target. So looking for a big move, unlikely, I would say, but you never know at the moment with these markets. So that's going to be published very soon. And thanks to Ryan, I also found out how to invert the charts. If you right click on the scale on the right, you can click invert. So yeah, that looks a lot better, doesn't it?
It does look better now, doesn't it?
Yeah. So yeah, thank you for that, Ryan. Okay, over to you, Jamie.
Thank you, Joe. I'm going to look at Ethereum today. Noted this range we've got that's formed on the hourly and 4-hourly chart. Obviously, we are in a longer term downtrend, but looking for this intraday move, getting some pretty nice reward on trading this range actually. So we're at the support end of the range now. It looks like we are trying to form some support here as well, with this hourly candle looking like a bullish hammer. So that's good for that kind of short term move potentially to reverse this back up to resistance. So I'm just going to buy it at the support. Can keep the stop pretty tight. Obviously we do have this spike down which did get through support, but that was a pretty aggressive move. For the majority of the time, you can see once here, twice here, maybe 3 times, then 4 times, and then this will be the 5th time. So yeah, it's just for what we do these intraday, having to pick something moves, getting this nice risk reward, the stop just below the majority of these lows, and then targeting the resistance. So we'll be buying this at current price, which is 1284. I call it just 1284. Where are we? Yeah, 1284. We'll keep our profit level, like I say, targeting those highs at resistance. So that would be 1396, and the stop will be at 1248. There we go. So if that does go in my favor today, we'll be making a nice 3.11R on that. So yeah, buying Ethereum today.
Okay, good luck, Jamie. Right, so day ahead, not a lot on the economic calendar today. We've got US EIA crude inventory numbers due out at 3:30 UK time. And then on Friday, we've got the US PCE prices index, which is another read on inflation in the US. So not much happening on the data front, but certainly lots happening in the markets in general, and obviously very volatile out there. So do be careful. Do trade safe. Make sure you've got appropriate risk management on all of your trades if you're getting involved today. And we will be back tomorrow morning.
Thanks for watching, everyone.
Have a good day. Bye-bye.